Welcome to the latest edition of Fundamentals. This time around, I'm going to look at what is currently the single most popular fund on the AJ Bell Invest Centre platform, namely Liontrust Special Situations. The fund's mandate is to provide long-term capital growth for advisors and clients, and it seeks to deliver this by building a concentrated portfolio of UK stocks. The well-known Julian Foch and Anthony Cross are the lead managers, and they work as part of Liontrust's Economic Advantage team, alongside Victoria Stevens and Matt Tong. To even qualify for potential inclusion in the portfolio, a company is screened according to a proprietary process to determine whether it has an economic advantage or not. Foch, Cross and team look for strong intellectual property, a powerful distribution channel or repeat business as starting points, giving companies a score. That initial shortlist is then whittled down further to provide a portfolio that currently contains just 50 stocks. The biggest holdings in the £2.5 billion fund include professional publisher Relx, pharmaceutical firms GlaxoSmithKline and AstraZeneca, drinks giant Diageo, and oil producers BP and Shell. By sector, industrials, tech, consumer cyclicals are the three biggest weightings, as we can see here. Utilities and miners, no presence at all, and telecoms barely gets a look in either. Large caps currently represent 40% of the assets, mid caps 30%, and small and micro caps the rest. The overall result of the Economic Advantage screening process is a fund with a Sharpe ratio of 1.13 and a beta of just 0.85 over the last 3 years. The fund is eligible for SIPs, ISAs and dealing accounts, and currently comes with a yield of 1.7%. Dividends are paid annually. The ongoing charge figure is 0.88%, and for those who set store by such things, the fund comes with a 5-star ranking from Morningstar. So, those are the mechanics. The question to address next is, why would your fellow advisors and clients be buying right now? And I think there are 3 possible reasons. The first is that economic advantage process. Advisors and clients know exactly what they're getting when they invest in the fund. Second, the strong long-term performance record of Foch and Cross at Liontrust and their previous employees will no doubt attract some, as well as the strong returns generated by the Liontrust Special Situations fund since its own inception in November 2010. The chart here shows how the fund has done. The third potential attraction is the UK market, as benchmarked by the FTSE 100 and FTSE 250, trades at pretty much all-time highs. Confidence seems to be returning after the summer 2015 China growth scare and 2016's panics about US growth and then the EU referendum vote. Meanwhile, returns on cash are anchored near zero and government bond yields remain lowly. So advisors and clients will be looking for ways to generate the best risk-adjusted returns for their needs and the funds which provide suitable exposure. The keyword there is suitable. There are always risks, whether they relate to the broader UK market in this case, or more specifically to the managers and their process. As such, advisors and clients should consider whether this fund fits with their overall investment strategy, target returns, time horizon and appetite for risk before putting any capital to work. Thank you for watching, and I look forward to seeing you next time.